What is up, everyone? Brian Rhode, Stone True Real Estate Mortgage Team, powered by Barrett Real Estate, Barrett Financial. Just wanted to give a quick one today, kind of talk about, home buyers in our current market, first-time home buyers, where we're at today. A lot of what we consider our top-tier A-paper buyers have purchased in the last few years. A first-time home buyer was pushed out of the market in many cases when, someone's paying $50,000 over listing, $100,000 over listing, waiving inspections, waiving appraisal. First-time home buyer just could not compete. There were a lot of investors, and now we're at a market where, while still not high inventory, first-time home buyers are able to get back in the market. So as a first-time home buyer, what are some key things that you need to focus on so you can get yourself prepared for a purchase? So first and foremost is always going to be work that credit. We need to make sure your score is adequate for the program that you're looking for. And what that score is varies pretty significantly based on what type of program you're looking for. If we're looking as a first-time VA buyer, that could be as low as 500. If you're an FHA buyer, 550, 580, 620, depending if we're looking for a larger down payment, 10%, smaller down payment, 3.5%, or even down payment assistance. So that is a key factor. If you're a conventional buyer, you're going to need upwards of 640, 660, 680. We can get it done at 620, but the rate and the mortgage insurance compared to those higher scores is going to be much worse. So another key factor is going to be our income and how we verify it. So that ties in with your credit, your debt to income ratio. So that is your total debts, including your house payment, divided by your total income. So if, for example, you are 1099 self-employed, how you report your income is going to have a huge impact on that debt-to-income ratio. Many self-employed or 1099 borrowers are going to have many write-offs and reduce their taxable income for a very good reason. The IRS will let you. It's a viable legal way to reduce your tax liability. However, when we're looking to purchase a home, that debt-to-income ratio is going to have a big impact. So if you write your income down too low, under the letter of the law, hey, that's great for you on the taxes, but it's going to make it hard to qualify for a payment that may actually be viable, but on paper is not. So in that situation, you have some options. You can look at a bank statement loan instead of traditional financing. Benefits of a bank statement loan: you can use your deposits in lieu of traditional income, taxes, pay stubs, 1099s. Drawbacks: they are a higher rate and require a higher down payment, big bump there. So that's going to have an impact on your total payment and what you have to bring as your cash to close. So, and then another big factor in any loan for first-time home buyers, your loan to value. So if you have minimal down payment, we have programs that are 100% financed. VA, USDA, FHA down payment assistance. Those are going to be programs where you have to bring minimal down. However, any of these are still going to have closing costs. So that's where the cost of the loan, that's going to be your loan fees, title fees, escrow, impound accounts, homeowner's insurance, all of that are part of your closing costs. So that closing costs amount can be paid by the seller if you have a great agent like myself or my team. That's going to be something that you can negotiate the seller to pay. In a highly competitive market, that may not be an option. So you're going to want to make sure you have the ability to have your down payment, the closing cost funds in hand. You're going to want to get with your lender, like myself, and confirm for your program what those closing costs are going to be. And again, if we can negotiate them, we absolutely will. But again, that's depending on how competitive the market is or that individual property. So again, real quick highlight, some key things for a first-time home buyer: making sure your credit score is as high as possibly it can be. Get with me, we'll run a credit simulator. We'll determine if your score isn't where we need it to be, how quickly and efficiently we can get it there, with paying off some debts, working some credit repair options like removing collections, negotiating charge-offs, paying down your credit card debts, etc. I mean, there's a number of ways that we can work that. Again, number 2 is making sure our income is verified, documented, you have an adequate job history, or we have an alternative program that may work for you, such as a bank statement loan. And then again, your loan to value, that's going to be your down payment for your specific program. Make sure that we have that set aside, or we have a program that wouldn't require a down payment. And then again, lastly, your closing costs. We want to make sure that we negotiate those to be covered by a seller, or you have those available, again, depending on your specific market. So again, message me, Brian Rhode, Stone Tree Real Estate and Mortgage Team, powered by Barrett Financial, Barrett Real Estate, here to help you. Message me today. We'll get you qualified and make sure all of these factors are addressed for you on your new purchase. So look forward to talking to you soon. You guys have an amazing day.